So this is going to be a quick breakdown of a gold trade that I took within this week. This trade was a mixture of the 1 hour time frame for markups and the 15-minute time frame for entries. Because as you can see on the 1 hour time frame, price was pushing up, right? Where we have a higher high, higher low. We have a new higher high, another higher low. We have an equal high, we have an equal low, which created a no trade zone right here. And then price ended up breaking above this no trade zone, giving us a new higher high, which is also an indication to the upside, showing us that anything above 43.62 has potential to buy from here all the way to up here. Remember, this is the 1 hour time frame. So this was our indication, and this black line is our key level. Anything above this black line has potential to buy from here all the way to up here. So once step 1 was done, we have an indication and a new higher high. We have to wait for step 2, and step 2 is going to be the correction. Price ended up correcting and then coming back above our key level. I did not take this entry because this was around 11 a.m. in the morning and I wasn't on the charts at that specific time, which is okay. Price ended up pushing up for a little bit, reached here and stopped, creating a lower high. So if we drop down to the 15-minute time frame, which is the time frame that I used for my entry, as you can see, when price corrected back to this key level, it created a higher low. This is a higher low because it's higher than the previous low, right? So we have a higher high, we have a higher low, and then price ended up pushing up. It pushed up, got to this point, stopped, created a lower high, then decided to drop back to the key level. This is when I got a notification from TradingView telling me that price is now crossing back above 43.62. And that was my key to enter this trade. This was my entry because, first of all, anything above 43.62 has potential to buy. And when price corrected back to this key level the first time, it ended up creating a higher low. When it came back the second time, it still did not break this higher low. If it was pushing to the downside, it would have kept on pushing and broken this higher low, giving us an indication to the downside, a correction and a continuation. But when it got to this key level the second time, it still stopped around here and decided to start buying up again. So this was my entry, and my stop loss was just below this last higher low that price had created. Why did I put my stop loss here? I put my stop loss here because if price had decided to go up and then come right back down and hit my stop loss, that would have meant that my whole trade idea is invalid. But as you can see, price made a higher low right here. It pushed up, got to this key level, created another higher low right here, and then it started pushing back up. So this was my first entry when price came back to the key level. But as you can see from this screenshot, I have 2 entries on this trade. And this is how I got my entry for this second position. When price stepped back into this key level, it created a higher low right here, created a lower high right here, and then it started consolidating. So if you mark that out, we have this zone where we have a lower high and then we have our higher low right here. Price ended up breaking above this consolidation right here, giving us another indication to the upside, showing us that price is turning back bullish on the 15-minute time frame too. Because we had this higher low that was formed. This is considered a higher low because it's higher than the previous low. We had this higher low, we had this lower high. Price ended up consolidating. We marked this consolidation out and then it ended up breaking out of this consolidation, giving us another indication. Price ended up correcting. This correction still created a higher low, right? So we have a higher low here, a higher low here, and another higher low here. And then when price came back above this level, that is when I added more positions. And my stop loss was still down here at this previous higher low that price had created. And all I had to do after that was just sit and wait. And as you can see, once price came back above this level, it just continued to push to the upside until it hit our target, which was around 44.33. A lot of you guys were asking me why I placed my stop loss down here. My stop loss was down here because if price was to come back down and break this last higher low that it created, that would have meant that the whole trade setup is invalid and price is currently pushing to the downside. But as you can see, price created this higher low, pushed up, created a lower high, came back to the key level, still did not break this higher low. It created another higher low, tried to push up, came back down, created another higher low, and then it started pushing up all the way to our target. So yeah, that is the trade breakdown. I know this was a quick one, but I hope this was helpful. If you have any questions, leave them in the comments and I'll get back to you guys. Thanks for watching. Peace.